Hello and welcome to the strategy training video on macro levels. My name is Michael, I'm from Traders Elite, and today I'm going to cover some cool information that we're really excited to share with you. The complete course with the indicator and auto trading EA will be available next year, but for a short time we're giving away the current version of the indicator for free, so make sure you grab it while you can. Okay, macro levels, detect dominant support and resistance levels. These horizontal lines you see displayed here on this chart are macro levels. They were generated from years of data and they play important roles in trading in the current time. For example, here, buying off this support, selling off the resistance, again buying off this support here. So what are macro levels? They're specific price levels of technical relevance that provide powerful support and resistance points. They're based on historical significant consolidation levels and major pivots on the daily, weekly and monthly charts, and they're proven technical strategy, providing strong reactionary entry levels that can be used on their own or combined with another core strategy. Looking back on the Euro chart using the monthly chart, we see the 1998 to 2012 time frame. Back in June of 1998 we saw this high reached, and this level then became a support right here for this low of this massive drop, and then here again, and then more very recently just here, a real consolidation level acting as support for this little move up here. If we then go and take a look at the weekly charts, we can see, for example, at December 2010 at 126.70, over here 126.70 acted as a support for here, and then again very recently right over here as a buy. So what we do is we generate these macro levels based particularly on the monthly and weekly as well as the daily charts. When we come into the daily, it starts to make a little bit more sense. We can see the 26.70 here, the 23.55 and the 26.70, how it bounces around here, uses it for support here, and then again more recently that's at 26.70. Again, this was picked in December 2010. So, for this point to be of significant importance, particularly if you're looking for a buy or if you're selling and you're thinking it's going down, it's like having X-ray goggles. It's really good to have that information of where those support and resistance points lie. As we get down to the 4-hour chart, this is the main chart that we use to trade the macro levels. And we can see here it came down off the 130, which is a macro level but also psychological level, drifted back, came back down, gave us another chance before it came straight back down to here. We don't see the 23.55 on the 4-hour chart, but right here is that 26.70 that we've referred to previously, the 126.70. So let's take a closer look at the charts here and how we work out which side of these lines in the sand we want to stand on. So just to start off, we can see here we saw a rally come up to this point and close just prior to this. We saw a little bit more activity, but again closing under that macro level. Therefore it becomes a resistance point. We see it coming down solidly through here, again crashing through this point here, and again that gives us the indication of moving downwards. It does fake at this point, but then comes straight back underneath that macro level, indicating a drop. Here we see the support. We can see that better on the next slide right over here, and again that's that 26.70 that I keep referring to. So if we just go back, a sell short macro level is an H4 bar that is closed below and within close proximity to the upper macro level. If the price cannot break and close above the macro level, it will act as dominant reactionary resistance. Okay, so in the buy long macro level is just the reverse. The buy long macro level is an H4 bar that has closed above and within close proximity to the lower macro level. And if the price cannot break and close below that macro level, it will then act as a dominant reactionary support. Okay, so the indicator is real easy. These levels are dynamically generated. They're taken straight off our database, so all you have to do is allow DLL imports, select the color that you want to use these macro levels on your charts, the line width, and install. That's all there is to it. So as far as implementing, download the indicator, use it to find those good entry and exit points for optimal results with your trades, regardless of whether you're using another strategy. But it's just going to help you find those dominant levels that we as traders are always looking for. It's easy to say, buy the dip, but where is that dip? Macro levels allows us to be able to determine with more certainty what those levels are going to be. Okay, so buy off the support, sell off the resistance. Of course, copy the signals with full trade management with your Traders Elite membership. Would love to have you on board. And to close, use macro levels in conjunction with price flip and trend catcher. I went over price flip just recently, and when you see a price flip, let's say a buy price flip, again at a macro level, it's acting as support, and that's going to give you a really strong indication that it is going to pop up, and vice versa on the downside. Of course, trend catcher will be going over that shortly, and you can use the macro levels with real precision when you use them in combination with the trend catcher. Of course, you can use them with any other core strategy that you're comfortable with and you successfully use. We welcome you to be a beta tester for our expert advisor that's being released soon, that auto trades the macro levels strategy. Of course, connect with us on Facebook and Twitter on the @TradersElite tag. And finally, leave a comment. We love all feedback. Like us and share. We really appreciate it. Thank you very much for your time, and I look forward to going over trend catcher with you next time.